Hey, it's Rob Weinberg, and on this channel, we empower people to take control of their future through expert mortgage, financial, and real estate strategies. If it's your first time watching us, don't forget to hit subscribe and smash the bell to get notified on the new content we're putting out every single week. In today's lesson, what I want to discuss is navigating higher rates and the smart refinancing tactics that homeowners are using right now. So there's no surprise that we are in a much higher rate environment than they were even 1 to 2 years ago. So we've seen a drastic increase in rates. And a lot of people are saying, well, that completely takes away the refinancing market, yet there were several million refinances done in the last 12 months, even while the interest rates were increasing significantly. So why is that and how is that? What do those homeowners know that you may not know that's allowing them to refinance and make a good move when you're thinking it may not make sense? So let's talk about that for a second. How does refinancing in a rising rate environment actually benefit a homeowner? So what we really need to do is not look at it as right now today, but the decisions we make today are going to affect us long term. So the interest rate that we have right now today is not as a result of what it is tomorrow or in the future, but what it was, what the economy was, okay? So we need to take a long-term approach. With that said, look at the big picture. There are other reasons to refinance besides just lowering your rate. What are those other reasons? Well, we may want to re-amortize your loan and stretch your loan out more so that you can have a lower payment. We may want to accelerate your loan and pay it off quicker, which generally will give you a higher payment, but a lower total interest over the life of the term or of the loan. And then cash out, debt consolidation. Where can our equity be used better? Are there investment opportunities, business opportunities, other real estate that we could use that money for that would give us a higher rate of return than what we're paying on that mortgage? So even if the mortgage rate is 7.5, if your rate of return is 8, 9, 10 plus, it makes sense to borrow. You're basically being your own bank, borrowing at one rate and investing the money at a higher rate. And that could be said for debt consolidation, taking mortgage money at 7.5 and investing it in higher rate personal debt like credit cards, student loans, personal loans, etc. Or an investment opportunity like we were talking about with a direct correlation or a future return that you're going to expect. So we want to really look at uncovering those investment opportunities. A lot of people are on the sideline. A lot of people don't have that capital, but if you do, that gives you opportunities that they may not see. Does refinancing make sense for your overall financial plan? How long until you retire? What financial moves do you have coming up over the next few years that you could make a decision on today that could get you there that much quicker, or that could align and correlate with those future financial goals? So hopefully this is getting your mind churning as to what you can be doing with this equity and why refinancing might make sense regardless of what the rate is. So we were talking about long-term savings. A lot of the time when people refinance in a high rate environment, they may have cash flow needs, cash flow issues. Maybe retirement's coming up and you've been paying this mortgage down for years, but you can't afford the payment anymore because you're going to be retiring and your income's going to go down. That's a scenario where stretching that loan out for a bit further might make sense because it's going to give you that long-term savings, allow you to stay in the home versus needing to sell it, for example. So we really have to look long-term on this. If you only look short-term, it's never going to work out because the short-term, when people make financial decisions based on short-term thinking, it ends up typically being a big mistake. So a common question that comes up now is, well, why would I refinance at all? Why wouldn't I just take a home equity line of credit or a HELOC instead of a cash out refi? I don't want to do a cash out refi because my interest rate is so low on my mortgage. I want to do a HELOC because then I get to keep my mortgage and get another loan with a different rate. Well, I'll tell you what, HELOCs did look good for a while, but with this drastic increase in rates over the last 12 to 24 months, HELOCs have increased substantially too. So your HELOC interest rate 2 years ago might have only been 3, 3.5, 4. Now it's 7 or 8%. What does that mean if you have a HELOC? It means that your payment has gone up significantly. What if you can't make that additional payment? Now you're in financial trouble. You could go behind. You could be at risk of losing your home. So that's the reason why for a conservative person that's not looking to to gamble their home, that's not looking to take a lot of risk, I believe the cash out refi is the most conservative strategy right now for tapping equity. Even though you're giving up a low rate on the first mortgage, you are actually lowering your risk in the long run instead of taking that HELOC, which is really just a large credit card against your home. So if you are going to look towards a HELOC, just know the risks and make sure that you're able to absorb that higher payment if the interest rates continue to increase over the next couple of years. So I want to give you guys some real world examples of clients that I've worked with over the last few months to help them refinance and uncover these strategies, even though their interest rate might have been going up. So I had a family come to me about February, March of this year with a major hurdle on their credit card debt. They had accumulated all this debt because they were retired and they weren't able to have that income that they had during their working years. They were really just a couple years into retirement, but they had accumulated all this debt. So they ended up going from a 4% mortgage to a 7% mortgage, so a substantial increase. But because we consolidated all their credit card debt, this $50,000 in credit card debt, their monthly savings was over $1,000 a month. It was actually about $1,200 per month. And for a retired couple that's not working, any active income, they only have Social Security and pension coming in, that $1,200 a month was a godsend. It was almost like hitting the lottery. If they had stopped and said, well, our mortgage rate is going up, so we're not going to do this, then they would have missed out on over $1,000 a month in savings. Okay, so that's just one example. The other one I'll tell you is a client that I had refinanced back in 2020, got them down to a 2.875 rate, one of the lowest rates I've ever had for any client. And they refinanced and closed just in the last few weeks, and their rate went up to 6.6% from 2.8%. Why would that make sense? Well, they had been in bankruptcy years back. They've now hit the seasoning to where we can get them a loan after bankruptcy. They have all this debt that had accumulated, and they also needed some money to finish some improvements on their home. So we were able to consolidate all their debt, get them the money they needed for the home improvements, and their payments still went down by $400 a month versus what they're spending now. So this client I had been talking with, because like I said, they had been waiting for this refi opportunity. Yeah, it would have been better a year ago. The rate would have been lower, but they didn't qualify for the mortgage at that time. Now they qualify, now they took advantage. And we're also looking at the future opportunity now to be looking at that refi in the next 12 to 24 months when the rates ultimately should come down a bit from where they're at today. So what tools can you use as a homeowner to make sure that you're taking advantage of these smart refi tactics and making the right decision when it comes to your home or your investment properties? So the first tool that I want to bring your attention to is going to be HomeBot. HomeBot is a service I offer all my clients free of charge that tracks your home value. It tracks the going rates and the equity in your home, so you know what opportunities that you have, and it sends you a monthly report out about what's going on in your home, about your equity, your neighborhood, etc. So HomeBot is only available to my personal clients, but if you are interested, stay till the end of the video and I'll give you my contact where you can reach out to me and get yourself added as one of my clients so you have access to the HomeBot system. Again, completely free of charge for you. The next thing is going to be wealth team meetings. So you really want to be meeting with your financial advisor, your CPA, your wealth team at least once a year. So that would be one way you can kind of look at the scenario in the economy, look at what's going on with rates and say, here's an opportunity. But most of all is your annual mortgage review. I saved the best for last. This is something I do with every single client, every single year. Whether you refinance with me 3 months ago or 3 years ago, we're doing the annual mortgage review. There's so many opportunities that come up people don't realize that we uncover during that annual mortgage review. So if you don't have a mortgage advisor that's giving that to you, I'm happy to orphan you in. I hope you found value in today's lesson, and you can reach out to me for a one-on-one consult, or if you'd like to be added on to my one-on-one personal client list. So my direct line you can reach me at by call, text, or private message is 860-413-3938. If I can be of assistance, feel free to reach out, and as always, hope you found value. See you on the next episode, and take care.